Hello everyone and welcome. Jeb Smith here. So in today's video, we're going to talk about the housing market in more detail. We're going to give you an update on what it means to be a buyer in this market, what it means to be a seller in this market. I'm also going to give you my expectations as to what I expect the next 6 months or so to look like in the housing market. You guys often comment on videos or reach out to me directly asking me my thoughts on home prices, where I see things going. And so I want to talk about it a little bit today because, I'm seeing some crazy things in this market, some things that I don't like as a real estate agent that's representing both buyers and sellers. But put that aside, I'm also going to tell you what I expect, where I will plan to see things, or where I think things will go over the next couple of months to even a couple of years in some cases, based on all the stimulus being put into the economy. But before we get into that, let's take a minute and just talk about the housing market, where it is right now. So if you're new to getting into the housing market, just to give you a little update, housing market is very, very strong. Most homes are selling above the asking price in most markets with multiple offers. Days on market is very, very minimal. So homes are selling very, very quickly. If you're looking to purchase a home, chances are you've got to see it within the first weekend. And more often than not, you've got to be above the asking price, at least here in Southern California, in the Orange County market, LA market. Otherwise, you don't have a chance. And so we've discussed, well, what could change this market? Because home prices are growing, appreciating at such a crazy pace. Like, how long is this sustainable? At some point, don't we have to reach a top? The common saying on my videos, people are saying, what goes up must come down. Maybe, but let's take a minute and talk about what could change the housing market. One is a rise in interest rate, and the other is a rise in inventory, because it's supply and demand. As much as people want to argue the fact that it's something else, it's supply and demand. When you don't have enough of something and a lot of people want it, it drives the price up on it. That is exactly what's happening right now. We don't have enough homes out there. There's a lot of buyers sitting on the sidelines due to low interest rates, due to changes in how they are able to work from home, migration patterns, millennials coming to the market at once. All of these first-time home buyers are essentially looking to take advantage of housing, of home prices, and what that's doing is it's bidding prices up because we don't have enough properties in these areas, so prices are continuing to climb. Now, if you had a lot of homes and the same amount of buyers, that would slow the market and bring home prices potentially down, not crash, but potentially down. The other thing that could happen is you could have a rise in interest rates, which over the last 4 to 5 weeks, we've seen that rise. Now, they've been pretty stagnant or so for the last week, haven't really seen a big adjustment in rates over the last week. But, rates at the lows were somewhere around 2.5, 2.75, and recently we've seen them at 3.25. Now, 3.25, historically speaking, is still a very, very good interest rate. Nothing you should, complain about in the big scheme of things, but rates have gone up a little bit, and we haven't seen any major disruptions with regards to housing supply. Hasn't really changed, but interest rates have gone up, but we haven't seen a slowdown in this market. In fact, in some markets, we've actually seen it pick up a bit. Now, people will say, well, interest rates are going to continue to climb. Yes, they might climb a little bit further. They might go higher. But understand that the rates can only go so high, because otherwise it would cause this whole thing to crumble. And the Treasury, the government isn't going to allow that to happen. For one, the Treasury, as much money is issued into the economy, they service that debt based on bonds. And so if they raise rates, bond prices are going to be higher, and that is going to cause, the amount of money that they pay every month to go up. So by raising rates, it costs them more money on the debt that they have to service, and that's not really ideal with what they're trying to accomplish, right? They're trying to keep the debt service as low as possible. and therefore you likely won't see rates go very far. Now on inventory, we've seen inventory pick up in some markets, but what's happening is as soon as that inventory picks up, buyer demand meets it, and those properties go into escrow, and therefore inventory levels aren't really growing at all. So inventory is staying pretty flat for the most part, right? So maybe you get a couple more houses per month than you had the last month, but in the big scheme of things, not a lot's changing on the housing front. Now, I realize there's moratoriums out there, I realize there's forbearance out there, but understand that's 6 months away before ever coming to fruition, if it does at that time. So for the foreseeable future, that's not going to change the housing market. Now, let's talk about what I'm seeing right now representing buyers in this market. I'm seeing prices go well above the asking price in a lot of cases. Home buyers are asking me, hey, where do you think we should write the offer? Do you think this would be a strong offer? And usually, my experience, again, 18 years in the business, I can look at where comparable sales sold, and I can give people a pretty good idea of where I think, it's going to go with regards to the price. In this market, I honestly have no idea. It's frustrating from somebody that is experienced, somebody that truly wants to help their client get a property. And it's nearly impossible because, there's so many offers on property. People are doing crazy things with regards to waiving inspections, giving up their earnest money deposit when their offer is accepted, just waiving appraisal contingency, just everything. And so that's really, really hard to compete with. And people would say, well, these people are overpaying for property. Well, a property's worth what somebody's willing to pay, regardless of what I think it's worth. And if somebody is willing to pay that, then in theory, that's what it's worth, because that's where the next comparable property that comes on the market is probably going to be based on. And it's not just one person willing to pay that price, it's multiple people in a lot of cases. You have multiple offers on property, and a lot of people are overbidding, not just by a small percentage, but a large percentage. And what I'm seeing on the selling front is sellers that price their home pretty close to the last comparable sale, maybe even lower than the last comparable sale by just a bit, are having really good success as properties are getting bid up well above that price in most markets, at least here locally. And even those that maybe start a little bit above fair market value are doing very well, whereas the properties that are priced high to start with because sellers think they want to try to start there and even go higher, those homes tend to sit a little bit. And that's been the same thing that we've seen for years. That's not any different in this market. But what we are seeing, that the homes in this market that are priced right are selling very, very quickly. So the real question is, where do we see things going? Where do we see things going in a couple of months with regards to home prices? Where do we see things going, I guess, with the economy as a whole? And, I've personally put this out there many, many times, but I believe that once vaccinations are, continue to roll out, more people get vaccinated, more people get comfortable getting out and about. States like California open up fully. I don't know what that looks like. That might be 3-6 months from now. But people can get out spending money again, people can travel, people can, go to shows, whether it's sports or entertainment or whatever it is, and get out spending money in the economy. I think you're going to see a huge resurgence in the economy. There's a lot of stimulus money right now being pumped into the economy. On many fronts, there's a lot of people getting stimulus checks. They're getting extra unemployment benefits. And, based on my experience, this money's not going to go into savings accounts. It's going to get spent. It's going to be used like intended to help stimulate the economy. So I think you're going to see a resurgence in the economy in a lot of ways. Last year, you had savings at an all-time high because people weren't out, eating out. They weren't out traveling. They weren't going to the movies. They weren't going, doing all of these things. So there's more money in the bank. People are going to spend that when they're able to. So you're going to see, this resurgence, if you will. And along with that, you're going to have buyers continuing to look for property. I think each month that passes by, home prices will likely continue. Now, is that something that I agree with, something I want to see as a real estate agent? And the answer is no. I would much prefer a market that was slower in growth, that didn't appreciate nearly as fast, because For one, it would be a lot better market for me. I think long term it would be a better market because it would be a more stable market. But the reality is I see things continuing to increase home price wise. And I'm sure you're asking, well, who can continue to afford these properties as they rise? And while it's a very good question, there are a lot of people out there buying these properties now with multiple offers against multiple people. And so it's not just one person driving this market, it's a lot of people driving the market. And until that changes, you're going to see home prices increase. You're going to see, it be competitive out there. Now, again, it's tough because there's a lot of things that are happening right now that are tough for me as an agent, not because I think it's going to cause a crash, but because it's causing a lot of people to get priced out of the market. And that, I struggle with that because I have a lot of clients that are in that demographic, and it's tough when we're out there writing offers and going into it that there's going to be multiple offers on a property and it's going to go way above the asking price, and you're going to have to give disappointing news again. So that's where the housing market is now. It's mid-March. We're about to see the spring market, which is typically when things heat up even more. And while I do think more inventory is going to come to the market, I think buyer demand is going to stay right there. That's going to take any of those properties that were coming to market and likely keep inventory pretty low, but I do think home prices are going to continue to rise through this. So this isn't the video calling a crash. This isn't the video telling you that I think things are going to change dramatically on the housing front, because I don't think they are, as much as I kind of wish they would to some extent. I don't think it is going to change, but I'll continue to update you as I get more information. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.